And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Sunday, September 19th, 2021. On Thursday, I had left off that I was leaving open the potential that the corrective sequence that was up could still be in force, needing yet an additional new high above what we had seen on Thursday at 44.7650. And again, getting back above 44.78 or 44.79. And I think we had resistance just above 4,500 up to 45.25. That obviously did not come in. And as we started Friday, the market was down here. And so I had still left it open with the thought that this was, because we were looking for C wave, wave 1 of C, wave 2 of C. And as they started to rally into the opening of our session on Friday, they were appearing that, okay, that's holding and we're going to go up. But within that first opening round, the market broke that low and disqualified it. So it negated additional upside for that particular moment. In fact, it negated it, period, by the end of the day. So going back, this now completed the minor wave 2, which was corrective, counter trend. And then we started a minor third wave. It is subdividing. It is not easy to see, actually, because we've got a strong rejection followed by a strong rally. So rejecting this, and then we had a rally back up, and then that was sort of rejected. But finally, when the US began again, it was fully rejected. So we continue to see rallies, rejection, rally, rejection, all the way down. So this would have been, they start the decline, and right there, that bar. They rally it back, and they rally it back, and reject it. And fine, rally, 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 rally. Again, this hourly chart. Take it all the way up. Again, making the push to get it above that high. And this was all coming into expiration. And that's again rejected. But they pulled it off on getting it as high as they could for the opening price, which was also an expiring price here in the US. Nonetheless, I think that we continue to move down in this minor third wave. So it is a decline. And let's just pull out the characteristics of what a third wave is going to look like and it's going to feel like. It is going to accelerate. And now the direction here is down. So if we're going to see acceleration, it is going to be to the downside. We've already now caught it. And now we're inside the third wave. So we're quickly reaching a point of recognition. So while these were pretty strong waves down or moves down, we may still get some stronger ones, which are going to pull us down below 4,400. Excuse me, that could happen during the Globex sessions. So being inside this third wave, let me just pop out to the daily for a moment and see if I can show it. It's not as clean. But on the daily chart, you can see that on Friday, we broke below the 50-day moving average. That and closed below it. And we are still below it. We're trading below it. That is weakness in the market. So we might accelerate even a little bit more now because we're at that midpoint. And we've already broken below 44.14, which would have been basis September contract. December contract, we were allowing down to 44.06 for the contract adjustment. We're now below that. They're struggling to hold it right now, but we've already traded down to 44.02, I believe, 44.04. And then right below it, we do have Fibonacci support at 44.01. But I don't believe that that's going to hold at all. This wave is, to me, if I'm looking at the daily, it's got a lot more room down before it is complete. So it's going to be a quick ride down, or it's going to be just a consistent ride down. But again, look at these bars. These bars are incredible, and they're incredible to be trading, because every time we get rejection, we're getting recognition of the size of the bar. So that would have been a place to short, and then you wrote it down to here. But then it comes back, and now you're going to get, that's a pretty strong bar up, but it's rejected, and then again it's enveloped. So if anything, you're selling here. Again, this is an hourly chart. You could probably have much higher signals to start selling. But on an hourly basis, you're giving signals to sell it, and then look at this. It's just, you're selling it at 440, well, let's see where that was, 453. And the next move takes you down to 444.22. Wow, got a lot of S&P points. And then once again, you get this up, boom, rejected. And enveloped. So here's your sell point again, 27. Maybe you got out here when it started to turn green. Didn't give a really tight signal. When it comes back down and breaks below that, continuation, you sell it, and you're writing it. Of course, you're in the next day. So by here, you're into today. So you could have written it into the close, let's say. In any case, I believe that we still have additional to do, but we're going to have rallies. You're just going to have to pay attention to what you're counting and how you're doing it. I need to see, that's good. See, we've got a 1 and then a 2 up here. And now it breaks down again, 1, 2, and now it's breaking down again, 1, 2, 3, 4, boom, 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 boom. It's just only 5 of 3. This 3, right? We got 1, 2, and then 1, 2, and it breaks down again. 1, 2, 3, 4, 5 of this 3, and then a 4 and a 5 of this 3, and then a 4 and a 5 of the bigger of this 5 down. So there is a lot to come to the downside, in my estimation. And that suggests that we're going to start breaking down. And here's the 100%, where wave 3 would be 100% of wave 1, at 43.54. Wave 3 is most often the longest and the strongest. Okay, so what are we looking at? I'm not saying it's going to happen tomorrow, but I am believing strongly that when they start to exit positions, now again, remember that they came in with all this hoopla on Friday, and they continue to write about it on the $2 trillion, I believe, expiration. If not, it's 2 billion. It's a huge expiration. I believe it's 2 trillion. But it's a big number to be long. And you got to come in and make a position adjustments. And this isn't a market that's basically saying that, oh, they're coming in too short when they're holding it lower. Because what happens now? China comes online, the Asian markets come online. There's still news coming out. So I just think we have more downside, folks. And we got to play it accordingly. You got to keep focused on what's in front of you, because that's where you're going to see it. I'm not worried about the who, what, where, when, or why. It's just believe that this is what I'm intending for it to happen. And you're going to get enough signals to let you know when we're going to bounce. But because you've got a little bit bigger view on what's happening and you've got the price action to read it, the selling could get intense, because the recognition to change your position has arrived. So you're in this point of recognition where you could possibly get something really hit hard. Then you're counting bars, then you're counting price, and you're looking for a color change. This is a low. And so far for the whole sequence, it is a new low. Could it bounce? Yes. And is it? Yes. But it's being very limited right now. Doesn't mean it won't go higher. It just means right now it's being limited. That takes into factoring, okay, what happens next? Maybe we get another green bar up. If it starts to get enveloped by a red, guess who's back in control? So that's what I'm saying. We recognize the bars, we recognize the changes. And we're doing that on a 5-minute chart, but you're balancing it out against your long-term or your little bit longer time frame charts. The daily chart. Daily chart's telling us there's weakness in the market. Take it down to the hourly chart. The hourly chart basically telling us the same thing, but it's getting a little bit more extended. Now we come down to the 5-minute and look at these moving averages. Do you find anything that's even remotely turning, remotely heading higher? Curling, any of them? No, you don't. What's that tell you? Right now, okay, opening it up, I can see the 4 and the 8 are slightly curling, but the 20 is not. So where does this have a chance of getting? Maybe up to the 20 before it turns again. That's another signal of weakness. We're now trading basically between the 4, the 8, and the 20. And if it breaks higher, then it's going to trade between the 20 and the 50. But we have resistance levels now, and they're corresponding with our moving averages. And this is a 5-minute chart. So they carry a little bit more weight, and you can double things up. Getting down to here, it's going to be support. It's going to provide a pause. I do suspect that it will be broken. Can't tell you when, but I'm not going to be surprised should it occur. That's my point. So let's trade what's in front of us and realize that we do have our points for where this market can and can't go. And that's what really is important. And I don't mean to say that it can and can't go. We can put parameters around it and understand when those parameters are broken in either direction, then we just expand it a little bit and realize where we are and what could the next level bring. But in terms of my larger pictures, I believe, and that would be the 30-minute, the 60-minute, and the daily. They're telling me there's more downside to come, and it may, and most of it should happen tomorrow. We likely are going to get rallies in there, and they could, depending on the depth of the decline, the bar before it, could be how hard it's going to bounce. But you can see right now, this one dropped 38 down to 16, so it dropped 12 bucks, 22 bucks, excuse me, and then bounce. You can run Fibonacci's from there to there, even on a 30-minute chart, and you can pinpoint where it can go back to. And you probably thought that it could get here, but it didn't do it easily. It was rejected. To keep it rallied. But these are selling areas in preparation for what they're going to do. Again, it could be harder because it's a 30-minute chart, and I'm not going to hold it against $6-7 S&P dollars against me at 50 bucks a point. You're going to, and on one lot, you're holding it for 350 bucks. If you have a big enough account, sure. In any case, I digress. For tomorrow, I do think we're going to have continued downside. Upside, I believe, should be limited to resistance. All of the moving averages, going back to the hourly chart, they are pointing lower. Even the 4 and the 8 on the hourly are not even hinted at a curl. So I think the weakness remains. The weakness is in the market. We have support at 44.01, could cause a pause, a place to pause. The sweet spot at 70.5 is 43.91. Could provide a pause, could provide a bounce, provide a decent bounce, $10, $12 bounce, and a little bit bigger in terms of one of these or one of these. Could very easily do it. An additional, because I think there's still more to do. If we get that, we're just finishing the 3, and then we got a 4, and then we have another 5. And that, my friends, just finishes the 5. So the third, it's 1, 2, this is 3, we get a 4, we get a 5, that finishes the 3, that we get labeled 3, then we get a wave 4, and then we get another, a little rally, and then another decline. And then, after it completes 5 down, it's completing the minor third. Then we get another ABC rally, but it's going to be a little bit bigger, and then more look like that. All very tradable. Who cares about the who, what, when, where, or why? this is the sequence right now. For me, and I prefer to trade it. And I prefer to be able to trade in and out of the market. And also for a position trader, a swing trader, these are trades. This is where it's happening. And you're going to apply the same principles. You're just going to get short here and you're going to ride it out. You're looking for that bigger move and you're willing to sit through it. Enter, stop, boom. It's all going to fit. 44.53, 44.63. You're risking $10. It's not a bad trade. And if I remember correctly, it didn't go back up. It went down. So the trade was very successful. And you can trail it. Now you got the 4. You can trail it. But you can trail it against the 20. You can trail it against the 8. That never got challenged. So enough. Doing a lot of trade room talk. So once again, I'm saying there's a big invitation out from me. Come and trade this with us. Come and trade it with me. I love input. I like other traders giving me their ideas, what they're thinking. That's what kind of trade room, an educational trade room, where we're working and we're reading price action, et cetera, et cetera. Anyway, I'm going to end it there, folks, because I don't want this to be too long. Didn't want it from the start. But this is what I see. And I think it's very tradable. And so for tomorrow, we'll see what happens. Just be able to trade what's in front of you, please. This thing decides to turn around and it's just going to keep going up. That's up to them. But recognize it via the bars. Recognize it via the bars so that you're participating and not sitting there going like, oh, I was wrong, I was wrong. I was looking for downside. You were wrong. It's like, no, I'm telling you, trade what's in front of you. That's what I'm telling you. If it turns, it turns. Nobody's right, nobody's wrong. Change. Go with it. Make the money. All right. Next update tomorrow, Monday, the 20th.